Hello everybody and welcome to the midweek market update from Smack the Markets for the 31st of July. So today being probably one of the most eagerly awaited days of the fundamental calendar this year, with the announcement of US Fed interest rates, the Fed decision later on this evening. We've also got quite a heavy news day today, with news on the CAD and the euro dominating, as well as the US dollar as well. So should be quite an eventful day, and possibly leading some of these events leading into sort of future direction for a number of these markets, particularly on the US dollar. So let's take a look at how the markets we discussed on Monday have fared, and also take a look at some of the other opportunities that we're looking at going into the remainder of the week. Now, first of all, if we take a look at the platinum market, on Monday, we were looking at platinum here for the market to continue. We're looking for the trend to continue with an ultimate opportunity up here towards the 900 level here on this weekly chart. Now, the market still seems to be looking, playing out sort of quite nicely, still heading towards that sort of 900 level. Of course, these markets never sort of run in a straight line, and we got to the 88 level sort of fairly quickly, which was the sort of trading opportunity that we took, and now we're sort of pausing a bit here on the daily time frame. A break above this sort of or a decisive break above this 88 level then sees us into this next sort of second part of this trading window on the daily time frame, up to that 900 sort of target level. In the trading room, on the sort of lower time frames, we managed to capture a nice trade here on the breakout of this sort of consolidation here on the 4-hour time frame. In fact, we entered on a lower time frame and got a quite tight stop underneath here, and took advantage of this move here to the as the trend continued. Now, we also discussed Aussie dollar. We were looking for Aussie dollar short here at the beginning of the week. It was around this sort of 69 level. We were looking at opportunities underneath 69, and for the market to continue sort of lower. And you can see the consolidation that we had forming here on the 4-hour time frame. So we actually got positioned on here in this early in the week on this consolidation. Market sort of kind of ground lower, and we had to hold into this overnight before the market eventually rolled over and gave way yesterday. So this was a nice trade with multiple targets for us as well, down to these levels, and we closed out pretty much at the lows there on that one. So we also let's come and have a look at the US indices as well. Now, US indices here, and particularly our favorite being the Dow, had been looking sort of rather sideways, and to be honest, it still does look rather sideways. It's been almost sort of waiting for this sort of Fed news, and I think the decision here on interest rates. The S&Ps and the Nasdaq do look a little bit more bullish than the Dow. But if we think about this from the context of what we know about these interest rates, is it's an expectation that interest rates in the US are going to be lower. Lower interest rates are generally bullish for stocks, and we can see that there's sort of markets starting to turn around here on some of these indices. So expecting that sort of correlation to continue, and the fact that these markets are in strong long trends at the moment, we'll certainly be looking at opportunities again for these markets to be pushing to the long side. So possibly up here towards the at least up to the old highs, and with the depending upon how the Fed plays the news this evening, this could actually sort of push these markets up into new territory, into new highs throughout the remainder of the week as well. Now, for particular sort of setups, it's sort of quite difficult to identify some of these ahead of those news announcements. Looking at the obvious ones here on the sort of 4-hour time frame, with sort of entries above these highs here and sort of stops below the lows, makes these setups quite wide. We prefer to be looking at more tighter opportunities on the lower time frames once these start to sort of play out. So new opportunities into the remainder of the week. Well, if we come and have a look at gold, the potential sort of increase of volatility that we might see may well sort of have an impact here on gold, and we may well get a bit of a rush into sort of safe havens for a bit of a rest of that sort of unpredictability in the currency markets. Now, if we see something like that, of course, gold is poised here for a new move to the long side, and you can see that we've had this sort of consolidation sort of forming through here on the 4-hour time frame. The market's sort of broken above that area here, and we've started to get trends starting to form here on these higher time frames as well. So again, looking at this from a technical perspective, we've got sort of highs up here around that sort of 1465 in the sort of near term as looking like sort of fairly easy sort of moves if we can sort of pick up something to the long side. So we're certainly looking at opportunities, keeping an eye on opportunities above this 1440 level here. As long as the market's above there, if it continues to trend higher, we're looking at opportunities to be able to trade through this sort of trading window up here towards that highs. We'd really want to be looking at sort of breakouts above these sort of current highs, because we've had multiple tests there. So we'd want to be free of all of that sort of price congestion before looking at opportunities. The other commodity, which I think is also worthwhile keeping an eye on, is oil. Now, oil here from the sort of higher time frames, if we look at this on the daily, we can see that the market's just sort of punched through this sort of 58 sort of area here. It's been previous support and resistance, been quite a structure level through there on this market, and that puts us into a new trading window up here towards that $60 level. So some nice sort of free space above price. It's a question of where the opportunity might be. And if we take a look at this here on the 4-hour, we can see that the 4-hour has started to trend now. We've started to get some good geometry here on the markets, but it's looking a bit extended. It's looking a bit stretched. So we'd want to see some sort of pullback in price, possibly back into here at 58, brings us into previous support and resistance structures as well, which looks sort of quite nice. And even if we start to come down to the lower time frames and come and take a look at this on the 60-minute chart and start to do some analysis on the 60-minute chart, we can see that coming into our sort of level here around 57.50, we've got that 61% fib level. If I zoom out of this, you can also see that we got quite that sort of tight level there of previous support now becoming resistance. So, or previous resistance now becoming support. So again, pull back into this area could be sort of quite nice if the market sort of finds support here, and could be an area where we can start to look for entry opportunities for continuation of this sort of trading window. As I said before, markets are likely to be quite volatile later on this evening with the sort of Fed news. So it's always good to be cautious of that, trade accordingly, and I'll certainly look forward to speaking to you next time. Bye for now.